New York Cocoa. The main pattern here in recent months had been the August to October bullish Andrews pitchfork, which you can see highlighted in dark blue on my daily chart. This is still valid, with the market at the moment between the upper time above, currently at 42.60, and the middle time below, currently at 40.13. However, there has been two, maybe three other factors that have been at play here in the longer term charts that have been the primary cause of the rises, one of which is still operational. So let's take a look at the longer term chart to see these factors. In my monthly chart, you can see the clear break higher back in April over the upper trend line, currently at 29.19, of the 2017 to 2023 ascending triangle pattern, highlighted in blue, dark blue on my daily chart. This is the first factor that led prices higher and has been a pretty good example of such a pattern, despite some small breaches on the downside. This is the most obvious factor, but an earlier factor was also in play, one that I highlighted as far back as January this year in my commentaries. It is the rare, very rare, annual key reversal up, seen here in 2022. Thus, the bullish incentive was at work here as far back as the end of 2022. The third factor is the one that is still operation right now, and that is the bow tie formation made from three moving averages. The 1 year moving average currently at 33.71, the 2 year moving average currently at 29.27, and the 3 year moving average currently 27.79. This happened back in September 2022, with the moving averages entering at that time in the right order, though not exiting again in the right order until December 2022. Now, this mismatch may have eroded the impact and definitely the timing of the bow tie formation. So what to do? Well, I would be conservative and look to where the bow tie crossover happened to start and make a measurement from there, with an eye to possibly extending it. Thus, the theory behind this suggests that between 15 to 20 months after crossover, so between this December 2023 and May 2024, we may see one or more of the following occur: a change in trend, a reinforcement of a trend, overall volatility. I know this is not exactly as some would like it, but after all, this occurred on a monthly chart, so one must allow some leeway in this ongoing pattern. So, moving back now to the daily chart. I've already mentioned the bullish Andrews pitchfork showing the overall recent bullish angle of attack and how it is still in operation. I would now like to deal with a even more recent bullish phenomena, the early October to early December bull channel, currently, highlighted in bright red on my daily chart. This bull channel had shown an even more acute bullish angle of attack than the pitchfork, but this week the market breached it on the downside and confirmed it, just about, yesterday, though personally I would like to see more action under the bull channel to make sure it is not a false break. However, that doesn't stop me from laying out some potentials on the downside for this pattern, for this break lower. Thus, the primary target X would be in the 39.75 zone, with a secondary hard to reach target X1 down in the 39.03 zone below. To reach target X, the market would have to overcome the middle time, whilst to reach the harder target X1, we don't have that much under the middle time, but I would keep a close eye On the October to November 50% Fibonacci line at 38.47, and an even closer eye on the rising short medium moving average, currently at 38.10, and the lower time currently at 37.66. London cocoa. There are some similarities here in the London contract with the New York contract. For example, we have a mid-August to early December bullish Andrews pitchfork. But we do not have a more recent bull channel as we have in the New York contract. And here in London, the lower time of the bullish Andrews pitchfork has been breached, something not evident in New York. These are two factors cast this market in a somewhat different light compared to New York. Now perhaps one could argue in a more advanced stage of development. It is an interesting way to look at it. Additionally, if we look at the longer term monthly charts, here we do not see an ascending triangle pattern in London compared to New York. At most, a descending triangle of sorts, highlighted in red, but I am really pushing the envelope on that one to call it such, as well as the shallow bull channel highlighted in bright green, which I'm also not happy about. No, the main feature here was the very shallow 2011 to 2018 bullish shift pitchfork, highlighted in dark blue, which to be honest was also a bit ludicrous. But it would be the break above the upper time back in July that was the key move higher, supported by all the ammunition below from 2017 to 2022. Finally, there is no bow tie formation here, unlike New York. Now going back to the daily chart, the break below the lower time here has given the opportunity for a new pattern, and that is a possible November to date base double top, an Adam and Eve type to be more exact. It is early on in such a development, but if we have a neckline for this double top in the 3400 zone and the market breaks this neckline, then we may have an initial primary target in the 3308 zone and a secondary hard to reach target in the 3229 zone. Now, I haven't labeled these targets as yet, simply because we haven't breached or broken the neckline of the double top. But if we do, I'd also caution on any move lower to look out for the rising short medium moving average below, currently at 32.56, and the recent 50% Fibonacci line a little lower than that at 32.34.